The other thing is that we have given some metal stocks this time. So generally you see metal is a cyclical business. You should know when to enter and when to exit is more important in that, because it is highly cyclical business. Metals are, price will go up very sharply, and it will fall at the same rate. It will fall very sharply also. So we should know when to sell. That is more important in metal companies, because the capex they are doing is very huge. 20,000 crores, 30,000 crores they will invest in putting their smelter plants and other things. Where at that time, by the time the plant is ready, the price will come down. So it will take lot of time for them to get back their money. So we have to know when to exit. That is more important. See, even now, no, the prices of international price of aluminum and all still not yet crossed the 2007 peak prices. If you see the international price of aluminum, 2007, in spite of huge rally we have seen in the last 2 years in aluminum prices, the price is still far below the 2007 prices. You take the crude oil price, 2007 it went to almost $140. It is now $160. So like that, huge difference will be there. The profitability also will move very sharply up and down. So we have to be very careful in metals. Right now, as of now, the momentum is there. That's why we have given this two aluminum stocks, Nalco and Hindalco. Nalco is a fully integrated player. It's a government company. Government owns 51% stake. So dilution is unlikely in Nalco. Whereas if you take Hindustan Zinc, it's also have a silver production, but why we haven't recommended is that a government owns 27% stake, Vedanta owns more than 60% stake. So when price goes up, both these players, both these parties are want to exit. So if price goes up means immediately they will come and sell. Both Vedanta wants to sell some stake, as well as government of India owns 27% minority stake in that Hindustan Zinc. They will also will come and sell. That is why we did not recommend Hindustan Zinc, where most of them are recommending it because of the silver play. And if you see the market, the broader market fell very sharply, though the large cap indices touched all-time high, Nifty, after the 13 months of gap. The broader markets, most of the stocks fell very sharply, and individual portfolios affected. I can say that in broader market, the valuation reset is happening. See, post COVID, after 2018 fall, 2018 many mid caps fell. At the time, what happened was that many quality companies, in the name of quality, got extra premium valuations. For example, the FMCG companies like Hindustan Unilever, Nestle, and all, historically they used to trade between 30 to 40 PE. But during 2018-19, what happened was these companies got re-rated and went to 60, 70, 80 PE like that. So the extra premium valuations got from these good companies. Now that is getting corrected now, because the growth is not that great as expected. So these types of companies, the valuations are getting corrected, and some of the story driven companies, there also the reality check is happening. So overall the valuation reset is happening in the broader market, and index is holding mainly because of some stocks are doing well, metal stocks are doing well, Reliance is doing well, then telecom stocks like Bharti Airtel is doing well. So L&T is doing well, then PSU banks, SBI is doing well. So select stocks are doing well in large cap indices. Even in large cap indices, many are underperforming stocks are also there. But because of some stocks are doing well, the benchmark indices hit all-time high. And US trade deal, still the await is continuing, and the only way the market sentiment can turn around for the broader market is the signing of this US-India trade deal. We don't know when it will happen, but it should happen, then only the market momentum will come back. And the individual portfolios, because of broader market fall, the individual portfolios are doing very badly, and some of the stocks are down by 50, 60, 70% and all. So the overall portfolio has underperformed the benchmark indices. And if you see that Nifty and Sensex, it is up by 2%. But what happened was that between last meeting and this meeting, the Nifty went from 25,500 to 26,300. It went from there. It has now corrected to 26,000. So from the peak, all the indices has corrected in the last 1 month, Overall Nifty and Sensex up by 2%, mid cap is flat, but small cap has worst performed, down by 4%. This is what I told, the reality check in broader market, where the valuation reset is happening in the broader market. So what is more important is that the high valuation low growth shares, they are correcting irrespective of fundamentals. If you see Hindustan Unilever, if you ask anybody, is a fundamentally strong company, everyone tells it's a fundamentally strong company, a lot of cash generation they are doing. But still, if you see that the last 5 years, the Hindustan Unilever has given zero return. Other FMCG company, Dabur, last 5 years zero return, and Imami, the another FMCG company, last 10 years zero return. All are good companies, they don't have any debt, good cash generation, good brand they are having. Why it is happening? Because the growth rate is not matching with the valuations they have enjoyed in the last few years. So that is the valuation reset is happening. Not only in FMCG, the other companies, I have told previous also, Bata, the all-time high price was 2000, now it is less than 1000 rupees. Bata is a good company, good brand, but still price has corrected. In paint, if you see the Kansai Nerolac, is a Japanese company. Previously, it was called Goodless Nerolac, then Kansai Japanese company took over that company, and the price has corrected more than 50%. It is trading at almost 8-year low, 9-year low. Why Kansai Nerolac is a good company, fundamentally strong company, but still the price has corrected. All this is happening because of this valuation reset. What I told, valuation reset is happening. That means the growth is not matching with the valuations. So that correction is happening now. Yeah.
Earlier these companies were enjoying PE of
70, 80, yeah, yeah. So
now it has
come down.
25, 30, 30.
No, not the 25. Still it is 40, like that. It is there. Yeah. So story-driven stocks, many story-driven stocks. No, a lot of stories will come. Then stock price will go up. That this will happen, that will happen. They will tell, but nothing used to happen. So these types of stocks are falling very sharply. 40%, 50% falling. A company called Transformer and Rectifier, Terrell. The company fell very sharply. Some news came that the company has been shortlisted by World Bank for not to give new projects, like that. So that stock fell by 20-30%. So like that, all the story-driven stocks, they are also seeing a sharp fall. So what will be important is that in our market, see, most of the almost 8 out of 10 investors came into the market post COVID. So almost 8 investors are new to the market. They haven't seen any long bear market. They haven't seen. So the what is happening now? No, they have seen the 3-4 years of very good bull market. Most of the stocks went up based on fundamentals and based on stories and all type of news because of high liquidity. So these new investors, now the market price falling, they will be learning a lesson what will be the market. So every fall we have to learn some lesson, that's more important. As on December 10th, if you see that Nifty has fell by just 2%, whereas if you see the individual portfolio from the peak, if you see most of the portfolio would have fell by 5% for a decent portfolio, and for those who are having only mid and small caps, you can easily would have fell by 10%, and mid caps by 3.5% it has fell, small caps 11-12, micro cap 16%. So the lower the market cap, the more the fall. That's what this chart shows. Large caps just 2%, large cap, mid cap 3%, small cap 11, micro cap 16. If you are having more micro cap in your portfolio, means your portfolio would have fell more. Repo rate, RBI, they have cut the repo rate by 25 basis point. So this time what happened was that generally Reuters used to take poll what RBI is going to do 1 week before RBI meeting. They used to take poll and they call us and ask also. So we told that they will cut by 25 basis point. Almost 95% of them told that the RBI will cut by 25 basis point. Then immediately after 2 days, what happened? No, rupee suddenly start weakening. From 88, no, it crossed more than 90. And suddenly most of them who told that the RBI will do rate cut, some of them went back and they said that RBI won't do rate cut because rupee has weakened. If they do rate cut means then rupee will further weaken. That's why because of the currency movement, they have changed their stance, and they told that RBI won't do rate cut. On the day of RBI policy meet, almost it was 60% of them told that RBI will do rate cut, 40% told that RBI will not do rate cut. But we were firmly that RBI will do rate cut. We were of the opinion. On the same day, as expected, RBI cut rate by 25 basis point by 5.25. This is the repo rate. So after the new governor came, no, almost 4 rate cut he has done, 3 times 0.25. Here is 1, here is 2, and last time. Then one time 0.5% rate cut he has done. So totally 5.25% rate cut they have did. So why we were of the firm belief that RBI will do rate cut is that see, RBI generally see what is the real interest rate for the depositors. It's very important. See, a person putting money in bank deposit, what is the real interest rate he is getting? That means, suppose if inflation is 4 and bank deposit is giving 7%, means 3% he is getting the real interest rate. So what RBI generally used to see is that the depositors should get at least 1.5% real interest rate they should get. So as of now, the inflation is very less, 0.2, 0.25 like that. Yesterday reading was 0.7, and what RBI projects is that next year first half they are expecting near to 4% inflation they are expecting. So 4% inflation rate. Now the repo rate is 5.25. So almost 1.25% real rate is there for the depositors. So we believe that the real interest rate is there for the depositors, so they will cut it as they have done it. But we feel that from here on RBI may go for a pass. They may wait for 6 months, 9 months, and they will see how the inflation pan out, and based on that only they will do rate cut from here on. That's what our expectation is, and mostly they will see how the transmission is happening. Now RBI has cut interest rate, whether banks has to do the transmission to the creditors. That means if who are taking loan, no, they have to reduce the interest rate. For the depositors also they have to do the rate cut, and that transmission RBI will see it in coming days, and RBI may pass from here on. So totally 125 basis point rate cut has been done with four cuts. 100 basis point equal to 1%. 125 basis point means 1.25%. Rupee has slide to record low. See, there are various reasons for rupee to slide. I will put a very interesting chart in that why rupee is sliding. So it's a very simple math. So rupee movement depends upon what money goes out of India and how much money comes out of India. Suppose if money coming into India is higher, means then rupee will strengthen. If money goes out of India is higher, means then rupee will weaken. So that is the math, and as of now if you see that rupee is weakening mainly because of trade deficit is very high. You see, October the trade deficit is a record high in our Indian history, almost 40 billion. Generally we used to have 20-21 billion range only trade deficit we used to have. We had almost 40 billion. In that, main culprit was the gold import. Gold import went up very sharply in the month of October. And then the next thing is that the shifting of crude oil purchase from Russia to other countries. See, when we bought crude oil from Russia, we used to settle in rupee terms and Chinese yuan and UAE dirham. Suppose if you start buying from other countries, means you have to settle in dollars. So the dollar demand is higher. That is also one reason. Then the delay in US-India trade deal. Because of that, what happened was that because of high tariff, no, many of them front loaded their exports. Whereas now the export has reduced it, and because of that also the export to US also has reduced it. Because of that also the inflow of dollar is less. That is also one reason. The last important reason is the capital account flows is lower when compared to previous years. So that is also one reason. So all these are the reason for the rupee falling. So the economists, what they are saying is that initially rupee will fall to 92, then again after in 2026 rupee will again strengthen to 88, 87 levels. That is what the economists are viewing. with a opinion that India-US trade deal will happen in the next few months. So this is the chart. Actually, yesterday came 90.50. It came. I took this chart the day before yesterday. 90.20 it was. So consistently falling 10-year chart. If you see that consistently, rupee is depreciating. On an average, for the last 30 years, 40 years, if you see that rupee tend to depreciate 3 to 4% in a year. It won't happen every year. For 3 years, 4 years, there will not be any depreciation. But in a single year, it will depreciate by 10%, 12% like that. On an average, rupee used to depreciate by 3 to 4%. In the past, it has happened historically. So this is the very interesting chart. See, balance of payment chart. This is, I have shown it previously also, many years back I have shown it. The rupee movement depends upon these things only. See, balance of payment consists of two things, current account and capital account. In these two accounts only money will go out and come in, current account and capital account. Many times you can hear that India current account deficit, current account deficit. Historically, India used to have a current account deficit only. We don't have any surplus. Rarely in one quarter we may have a current account surplus like that. But historically, India is a country with current account deficit. So in current account, what are the things comes? Merchandise, which is the goods, hard goods we export and import, like crude oil, gold. We export textiles, shrimp, leather items. All these will come under exports. Imports, main item is crude oil. Then gold is there. Then electronic items are there. These mobile phones. All these are import items. So historically, India used to have a huge deficit in this. We import much more than what we export on merchandise, which is the hard goods. And the second thing is the invisibles, services. Services is nothing but the IT services, this Infosys, TCS, what they are doing. Historically, if we have a huge surplus in services. Then miscellaneous software and other things. So for example, as a company will give dividend. For Microsoft is there, they give dividend to their parent, means all this will come in this. Then transfer and grants. See, many NRIs are there in foreign countries. They will send money to us, to their family, to India. These and all will come into transfer and grants. So in invisibles we have a surplus, in merchandise we have a deficit. So overall, most of the deficit will be balanced by this surplus. But still we may have a small deficit, which is called the current account deficit. India historically have a current account deficit only. We used to have current account surplus. I think only during COVID or sometime we had some current account surplus, because we import heavily than what we export. So this current account deficit, no. So its overall dollar is going out of our country in current account. How it is matched? If you see that through capital account. In capital account, what is there? Equity, where the foreign institution money is coming, then foreign direct investment is coming. See, foreign institutions means where in stock market they will buy and sell. Foreign direct investment means where they invest directly into our country. For example, LG India, they had a company there, LG Electronics, where they invested as a foreign direct investment. They have invested. Recently, it got listed now. So these type of companies, Amazon is there. They have an India. They have a very large unit. So this money will come into foreign direct investment. So India used to attract lot of foreign direct investment historically, but in the last 2-3 years, no, that growth has come down. Overall, we had a big surplus, but now in the last 2 years, what has happened? This foreign institution, they are not buying, they are selling it. Foreign direct investment, the growth has slowed. So overall, the net surplus got reduced. The other thing that come into capital account is the debt, where the NRI will put deposit. NRI, if they send money into their family, means that will come into transfers and grants. Whereas if they deposit money in the bank, means that will come under capital account, which is the debt. Then India used to take debt from World Bank, and all that also will come into this. Then many companies used to borrow money from foreign in Japanese yen and in foreign banks. That will come in this external commercial borrowing. So in capital account, equity and debt is there. So Historically, we used to have a deficit in current account and we used to have a surplus in this because of high foreign direct investment and foreign institutions. But last 2 years what happened was that these two has slowed down a lot. So that is why the current account deficit could not be able to match with the capital account. These two difference will get reflected in the forex reserves. When capital account is much higher than the current account deficit means forex reserves will go up. If capital account and these two are unable to adjust means this forex reserves will come down. So if you see in the last 1 to 2 years the forex reserves is not going up because the current account and capital account there is a deficit. That is why the forex reserves is coming down. But in the past last 10 years 20 years if you see that the forex reserves has gone up mainly because there was a huge inflow of FDI and FII. So this is the math of this balance of payment chart, and FDI flows if you see that the foreign direct investment here it is last 3 years no the foreign direct there is not much growth. FY21 it is $82 billion, FY25 $81 billion. So there is no growth of foreign direct investment in the last 5 years, whereas the outflow is much higher. They say for FDI outflows from India. For example, now Hyundai listed in our country. What did Korean parent? They took money from India. So the that money will come here. Similarly, LG Electronics they listed their company in India. FDI outflow was there, so that will come there. So the outflow was much higher. Similarly, many PE players they are selling stakes in Lenskart, Ola Electric, all these listed companies now. All this will come here. So that is why the outflow is very high, whereas the inflow has stagnated. So the net FDI fell very sharply. That is the reason why rupee has depreciated. See, RBI cannot control a rupee beyond a point. It's a math only. Money coming in and coming out. For time being, they can ensure a smooth depreciation. That alone RBI can do, but they cannot fix the rupee and rupee dollar permanently. So this trade deal market is still awaiting. Let's see when it will happen. But many management have told that if the US tariff continues beyond January means that business will get affected significantly. Those who are exporting to US. That's what many company management told in their conference call. Till December they can manage, but if it goes beyond January, February means then the business will get affected significantly. GDP data 8.2% GDP growth is there, so much higher than expected. The nominal GDP that means plus inflation, this is the real GDP plus inflation it is 8.7. So that is gradually coming down. This is the nominal GDP. Real GDP plus inflation is the nominal GDP. If you see historically the growth is gradually coming down. 1970s if you see that the nominal GDP used to be 11% average, 1980s it used to be 15, 90s also 15, then 2000 to 2013 if you see that it is around 13%. GDP used to grow by 8%, inflation will be 5-6, so 13%. That has again fell to 2013 to 25. So gradually the real GDP is coming down, and if you see in the last 4-5 years also it is coming down very significantly. So current year it is expected the real GDP, the nominal GDP will be 8.8%. So this will get reflected into mainly company sales. Company revenues, no, generally they grow in line with this. That is why if you see in the last 1 to 2 years, the overall growth of the corporate India is coming down. Previously it used to be 10%, 15% like that, but it is now 6%, 7%, 8%, mainly because the nominal GDP is falling. Auto sales is very strong. If you see that this is the retail sales data, generally two auto sales will come. The one which we are seeing on the every first and second of the month, their Maruti, Tata Motors they used to put, that is the wholesale number. That means company dispatches the vehicle to the dealers, and this is dealers they will sell to the their clients, their retail. This is the data of the retail data, where the FADA federation is there of retail. They used to give this data FADA, And if you see the passenger vehicle almost 19% up, three wheelers are also up, commercial vehicle 20%, tractor 56%. Two wheeler is slightly negative, but it is mainly because of the base effect of last year, but two wheeler also very strong, and it is expected that the auto sales will remain strong for another 2 to 3 months. That's what both companies are saying, as well as the dealers also are saying. US Fed, they have again cut interest rate to 4%, but from here on Fed rate cut also very difficult. Now they are expecting just one rate cut in next year 2026. So maybe a big debate is going on, offer for sale in primary market where the promoters are selling. See ICICI Prudential, where it's a 100% offer for sale, where the Prudential is selling the entire share. So it is happening not only now, but if you see in the last 10 years, 12 years now, from 2013 onwards, the offer for sale is the main portion of the primary market. 70%, 50%, 60%, 75%, like that it is there. So this is the phenomenon which is not high, it is not new, but this is happening for the last more than 10 years. It is happening, and it will continue like this. The only difference is that the quantum of money raised is much higher now. Previously, see, it is small, whereas now it is very high. That is why everyone telling that the offer for sale portion is very higher. Foreign flows continue to be selling, but much lower than what it was last year. Previously they used to sell 50,000, 60,000 crores. Then it came to buy. Now again they are selling. Every day they are selling 1,000 crores. Previously they used to sell 4,000, 5,000 crores. They used to sell. Mutual fund flows are stable mainly because of the SIP contribution. Almost 29,000 crores it is coming through SIP. So near term view is this US India trade deal is very crucial for the market to bring back momentum. So it is very important. We don't know what will happen. If it goes another 2-3 months means, then market momentum may not be there. So February 1st budget is coming. We have to see how pre-budget rally will be there or not, and it will remain to be a stock pickers market. These two are important. US trade tariff, any agreement we have to watch, then IPO market. Okay, thank you.